Okay, let's unpack this. We are absolutely living through a period of massive technological shifts happening right now.
Yeah, definitely.
And these are creating just unprecedented opportunities, but yes, also, a whole lot of disruption.
That's the key tension, isn't it? Opportunity and disruption side by side.
Exactly. So our mission in this deep dive is really to explore source material from a leading expert, someone managing nearly $30 billion.
And widely recognized, yeah, for spotting these big trends really early.
Very early. And making some incredibly bold predictions that have, well, frankly, been remarkably accurate over time.
What's really striking, looking through these sources, isn't just the individual technologies, though. It's how they're converging,
Right.
amplifying each other.
Accelerating.
It's a systemic transformation, not just isolated gadgets.
Yes. And so in this deep dive, we're going to get into those core technologies driving the change. We'll look at some maybe surprising predictions about companies you definitely know, and maybe some you don't. We'll dig into the potential for, well, explosive economic growth this could unlock.
Which is a huge claim.
It is. And crucially, discuss what all this sweeping change means for you, whether you're thinking about investing or maybe just trying to navigate the future of your career, your work.
And the source material, it comes from someone with, what, over 40 years of market insight?
Yeah, 40 plus years.
And their whole approach, it seems, has always been focused on these technologically enabled companies, the ones really set to transform the world. That long-term disruptive view is, well, it's fundamental to the analysis we're looking at.
So where does the expert even start in making sense of all this complexity? The source material lays out this framework centered around 5 big innovation platforms.
Right.
Think of these as the fundamental forces reshaping, well, everything. Our economy, our lives.
Yes, and understanding these specific platforms is presented as key to seeing where the opportunities really lie.
So what are they?
Okay, they are robotics,
Okay.
energy storage,
Makes sense.
artificial intelligence, AI,
The big one.
blockchain technology.
Right. Or digital assets.
Exactly. And then what's perhaps the most scientifically complex, but with incredible potential, multi-omic sequencing, mostly in life sciences.
Multi-omic sequencing.
Yeah.
Okay, maybe unpack that just a bit for listeners who aren't deep in biology.
Sure. So essentially it's about combining data from different biological layers.
Yeah.
Think genes, that's genomics, proteins, proteomics, metabolism.
Okay. So getting a fuller picture.
Exactly. A much, much richer picture of what's actually happening inside an organism. It's powerful stuff.
And among those 5, AI gets flagged as something really extraordinary. The source material actually calls it the single biggest technological disruption in history.
That's a massive statement.
It is a powerful claim.
And if you connect this back to the broader picture, staying informed about these 5 platforms, it's not just, academic curiosity.
Oh.
It's presented as absolutely crucial for navigating what's coming. It's about getting on the right side of change.
The right side of change. I like that framing.
Because that's where the most significant investment potential is expected, and importantly, where future job creation is likely to happen.
Which naturally leads us right into the investment side of things. The source material really draws a contrast, doesn't it, between traditional investing and focusing on disruptive innovation.
Yeah, definitely. You might look at a giant company like Apple, for example.
Right. Seems like the ultimate safe bet. Massive cash. Dominant.
But the perspective shared in these sources is, well, even a company like Apple could face significant disruption from AI down the line. Its revenue growth, for instance, has slowed dramatically, almost flatlined recently.
But more of a mature cash cow.
Arguably, yeah. And that's contrasted really sharply with the kind of explosive potential seen in companies that are actively using these innovation platforms to shake up markets.
Okay, speaking of companies at the forefront, let's take a deeper dive into Tesla. Now, when most people hear Tesla, they think electric cars, right?
Sure, that's the obvious part.
But the source material presents a really different view.
Yeah, what's truly fascinating here is the argument that Tesla isn't just an electric car company. It's framed as potentially the largest AI project on Earth.
Wow. So the car itself, it's like a data collector.
In a way, yeah. The EV they sell is kind of the data gathering platform for something potentially much, much bigger.
And that bigger thing is autonomous mobility, the robo-taxis.
Exactly. The grand vision is this huge network of autonomous taxis, robo-taxis.
And the scale of that vision,
Yeah.
the numbers are just staggering.
According to the research shared here, this autonomous taxi ecosystem, it's projected to generate something like $8 to $10 trillion in revenue.
Okay, wait. $8 to $10 trillion.
Yeah. Over the next 5 to 10 years.
Let's just pause on that number,
Yeah.
$10 trillion. To put that in perspective, the entire global GDP today is, what, around $130 trillion?
Right, so it's not insignificant.
Not insignificant is an understatement. We're talking about a potential new market emerging relatively quickly that could be the size of a major chunk of the entire world economy. How does the expert actually see this unfolding? Is it just theory?
No, the source points to concrete steps, like the plan to launch cybercabs.
Cybercabs?
Initially using Model Ys, apparently starting maybe next year, potentially beginning in Austin.
Okay.
And the really revolutionary idea is that your car, it could become an income-generating asset when you're not using it.
Your car making money for you.
Exactly,
Yep.
by participating in this autonomous network.
And transportation, I mean, is such a cornerstone of the economy. The source suggests it might even be the single biggest employer globally, if you count everything.
Could be. Moving people, moving goods, it's fundamental.
Oh,
And this shift also has these profound cost implications.
how so?
Well, think about ride-sharing costs now. In the U.S., an Uber might cost you, what, $2, $3, $4 a mile?
Yeah, somewhere around there.
At scale, maybe within 5 to 10 years, the source predicts Tesla could potentially offer autonomous rides for around 25 cents a mile.
25 cents. Wow. Okay, so if the cost drops that dramatically, what happens then? What are the knock-on effects?
Well, historically, when you slash the price of something useful, what happens? Demand surges.
Right, you get way more usage.
Exactly. So the expectation here is dramatically increased usage of road networks, which potentially leads to much more congestion.
More traffic jams. Makes sense.
And this prediction, this potential for future ground congestion, interestingly, is what led the experts' research team to start focusing more on eVTOLs.
eVTOLs, electric vertical takeoff and landing, like flying taxis.
Sort of, yeah. Think electric helicopters or maybe drone-type vehicles for passengers. Companies like Archer are mentioned in their portfolio.
So tackling the next problem created by the success of the first solution.
Precisely, addressing that future congestion challenge.
Okay, circling back to Tesla's stock itself. The expert was famously bullish early on, right?
Oh, yeah. Very early, very vocal. They predicted the stock would hit, I think it's a $4,000 pre-split way back in 2015. Seemed crazy then.
But they were right.
Ultimately, yes. And their current prediction, according to the source material, is $2,600 per share within 5 years.
$2,600.
Yeah.
So how do they get to that valuation? It can't just be selling more cars.
No, and the source material is really explicit about this. It states that 90% of that predicted $2,600 value is attributed not to traditional EV sales.
But to the robo-taxi platform.
Exactly, to the potential of that autonomous platform and the recurring revenue it could generate, selling miles, not just cars.
It's a huge shift in the business model. But obviously there are hurdles, right? Especially regulatory ones for full self-driving. It's not approved everywhere.
Correct. That's a major factor. Approval is handled state by state in the U.S., which creates this, patchwork.
Yeah.
And there's been, understandably, caution in places like the UK and Europe, although that seems to be slowly changing.
So federal regulation could speed things up.
The source suggests that federal regulation in the U.S., if it happened, could significantly accelerate deployment. But that's still an unknown.
Now, there's another incredible idea connected to Tesla that the expert says isn't really factored into their current stock predictions yet. Humanoid robots.
Yes, Optimus, the Tesla bot.
Robots designed to operate in human spaces, homes, workplaces.
And what's surprising, according to the source, is how quickly this seems to be progressing. Again, it's that convergence kicking in. Robotics, better energy storage, and powerful AI.
And Elon Musk himself has said he believes this humanoid robot business will eventually be much bigger than the car business.
Right, a long-term view the expert apparently agrees with.
So what's the potential market size for that?
The prediction mentioned for the humanoid robot market is just staggering. $26 trillion in revenue.
26 trillion.
Yeah, though that's seen as a longer-term opportunity than robotaxis, maybe further out. But the timeline might be pulling closer than people thought.
And how advanced are these things getting? Is it just hype?
Well, the source points to things like the video of the Tesla robot dancing, emphasizing it was real, untethered, doing it autonomously, not like earlier, more controlled demos.
Okay.
And the aspiration mentioned is for these robots to eventually achieve dexterity fine enough to, thread a needle.
Wow. That illustrates incredible precision and AI capability.
It really does, which, naturally brings up the question on everyone's mind.
What does this mean for human jobs?
Exactly.
Okay, before we dive fully into jobs, let's quickly touch on another application of AI that the source material describes as potentially the most profound application of all: healthcare transformation.
Yes, this area is just being completely revolutionized, again, by convergence. Multi-omic sequencing, AI, and CRISPR gene editing working together.
CRISPR, that's the gene editing tool, right? Like molecular scissors for DNA.
Precisely, allowing scientists to precisely cut and edit DNA, which opens up unbelievable possibilities for treating genetic diseases.
And the impact isn't just theoretical anymore, is it?
Yeah.
It's happening now.
No, it's real. Examples given include AI analyzing all that multi-omic data to diagnose cancer way earlier, like in stage 1, potentially even before symptoms show up.
Incredible.
And we're seeing the emergence of potentially curative single treatments for diseases that were previously just managed, often poorly.
Like what?
CRISPR Therapeutics is highlighted specifically for its therapy targeting sickle cell and beta thalassemia.
Right, devastating genetic blood disorders.
Yeah. And while the source notes the preparatory treatment for patients, the preconditioning can be difficult, the demand is significant because it offers the potential for a much more normal, transfusion-free life, a potential cure.
That's truly life-changing potential. Okay, let's pivot now to another major area covered extensively in the sources: digital assets.
Right. The expert specifically prefers that term digital assets over just crypto.
Why is that? To convey more legitimacy.
I think so, yeah. To position them as a serious new asset class, they're seen as the potential native currencies and the underlying infrastructure of the internet itself, poised to transform financial services globally.
And this expert actually has a personal history here, right? Got in early.
Yeah, apparently invested personally in Bitcoin back in 2015 when it was around $250.
Wow.
And their firm, ARK, got early exposure through something called GBTC.
GBTC,
Yeah.
Grayscale Bitcoin Trust. That was an early way to get Bitcoin exposure in a brokerage account, right?
Exactly. And it started as a relatively small position for them, like 1%, but it ballooned significantly as Bitcoin's price took off.
But what's the core argument for Bitcoin now? Why is it presented as so important?
The argument is that Bitcoin represents a brand new asset class, the first truly new one since equities, like stocks, emerged way back in the 1600s.
A new asset class.
Right.
Okay, so what's the investment case from that perspective?
Well, for large funds, for institutions, it offers diversification. Its price movements historically haven't been tightly correlated with traditional things like stocks and bonds.
Okay, that makes sense for portfolio construction.
And now, critically, with the SEC approving spot Bitcoin ETFs.
Spot ETFs, meaning they hold actual Bitcoin, not just futures.
Right. That approval means institutions, fiduciaries, they almost have to consider it now. They need to compete to offer their clients access. It changes the game.
And then there's the supply side of Bitcoin.
Yes, that's a huge part of the story. Only 21 million Bitcoin will ever be created. That's hard-coded.
And we're close to that limit already.
Very close. We're approaching 20 million already mined. So the supply of new Bitcoin coming onto the market is extremely limited, and it gets cut in half periodically with the halving events.
So you have this fixed or very slowly growing supply.
Right, an inelastic supply.
Meeting potentially trillions of dollars of new institutional demand wanting exposure.
That interaction, strong new demand hitting that hard supply cap, is seen as the primary driver for future price appreciation.
Which leads to their price target.
Yeah, the source material presents a Bitcoin price target of $1.5 million.
$1.5 million. By when?
By 2030.
Wow. Okay, that's a huge number. What are the main factors that their research sees driving that kind of appreciation?
They highlight three key building blocks, really. First, that accelerating institutional adoption we just talked about. Fiduciaries increasingly needing to consider it.
Okay.
Second, its growing role as digital gold, a store of value, especially appealing, apparently, to younger demographics who trust it more than traditional systems sometimes.
Interesting. And the third?
And third, its crucial use case in emerging markets. As a hedge, an insurance policy almost, against currency devaluation and political instability, a way for people to protect their savings.
Makes sense. What about volatility? Bitcoin is famously volatile.
The source acknowledges that. Absolutely, it's been significant. But it also notes that the volatility has actually been decreasing over time as the market matures, as more long-term holders come in.
So still volatile, but maybe trending less so.
That seems to be the observation. And the potential return implied by that $1.5 million target is obviously huge. Their modeling suggests potentially a 15-fold increase from current levels within about 5 years.
15 times, that's all. Yeah.
And the key characteristics underpinning this potential are listed as it being a decentralized global monetary system, being backed by the largest, most secure, decentralized computer network in the world, never been hacked since 2009.
That's impressive.
And fundamentally being native to the internet, built for the digital age.
Okay, and it's not just Bitcoin, right? The source mentions other important digital assets and companies too.
Yes, definitely. Coinbase is highlighted specifically as a leading exchange, importantly, one that's focused on being regulatory compliant.
That's key now.
Very key. And they're expanding globally, building core infrastructure for this new financial system, payments, and actively educating policymakers, apparently.
And other assets beyond Bitcoin.
Yeah, while there are thousands of digital assets, the big three mentioned as likely long-term successes are Bitcoin, Ethereum's native asset, and Solana.
Okay, different roles.
Sort of. Bitcoin is viewed as the foundational big idea, the digital gold. Ether and Solana are seen as critical platforms for building decentralized applications, or DApps. All three are expected to be successful long-term, but Bitcoin is framed as the biggest idea.
And stablecoins.
Right. Stablecoins are also noted as increasingly important. These are digital assets designed to hold a stable value, pegged usually to something like the US dollar, like digital cash.
Crucial for usability, I imagine.
Especially for emerging markets, making digital transactions practical. And they're becoming more accessible via platforms like Coinbase, and the source mentions companies like Circle, a major stablecoin issuer, potentially going public soon.
Okay, so we've explored the tech foundations, the 5 platforms, and the huge investment implications across AI, robotics, healthcare, digital assets. Now let's shift to maybe the most important aspect for most people listening. The broader impact on the economy and, critically, on jobs, the human element in all this.
Right. Because this period of technological convergence, it's viewed as having the potential to unlock truly explosive economic growth.
Explosive growth? How explosive?
Well, the sources put historical GDP growth rates in context, maybe 0.6% annually way back before industrial times, then accelerating to about 3% over the last century or so with industrialization.
Okay, 3% is what we kind of think of as normal, healthy growth.
Right. But based on the synergistic impact, that combined power of these 5 innovation platforms working together, the experts' research predicts that real GDP growth could accelerate dramatically to 7.3% annually over the next 5 years.
7.3% per year.
That's the prediction based on their models.
That level of growth would mean just unprecedented wealth creation globally.
It would. However, as you said, it immediately brings up those major concerns about job displacement.
Yeah, it's the big question everyone asks, isn't it? Will the new jobs created in new areas keep up with the jobs being automated away by AI and robots?
And the source material is honest about this. It acknowledges that predicting that balance precisely is incredibly difficult.
Especially since many of the jobs of the future, they don't even exist yet. We can't imagine them.
Exactly. And this whole challenge is happening at a time when the developed world, particularly, faces these significant demographic headwinds.
Like what?
Like already low unemployment rates in many places, an aging population, shrinking workforces in some regions, even the risk of overall population decline in countries like Japan or parts of Europe.
Okay, so if the human workforce isn't really growing, or is even shrinking in some key economies, but the economy is expected to grow dramatically, like 7.3%, what fills that gap? How does that work?
This is where AI and robotics become, from this perspective, essential.
Essential, not just optional.
Necessary, actually. They aren't just seen as displacing workers in this view. They're seen as necessary for productivity growth to fill the gap left by insufficient human labor, given those demographic trends.
So robots and AI are potentially enabling continued economic growth that wouldn't be possible otherwise because of demographics.
That's the argument presented. A potential solution to a looming demographic productivity crisis.
And the very nature of work itself is expected to change fundamentally too, right? The source talks about vibe coding.
Yeah, vibe coding. It sounds a bit funny, but it's basically programming using natural language.
Like just telling the computer what you want in plain English.
Essentially, yeah. With advancements in AI, like these large language models, you can describe what you want a program to do, and the AI can help write or even write the actual code.
That has huge implications. It
Yeah.
lowers the barrier to entry massively.
Enormously. It could enable almost anyone to become a programmer of sorts, someone who can create digital tools or solutions without needing deep traditional coding skills.
Which could lead to what,
Yeah.
Lee?
Potentially a creativity explosion, vastly increased customization, personalization of software, of digital experiences, because more people can build niche things instead of relying only on mass market applications.
That makes sense. And maybe people taking more risks themselves.
This shift could also encourage more individuals to take initiative, maybe start their own things, potentially reducing reliance on traditional large corporate structures. The sources even touch on how digital assets could facilitate new ways of organizing, like DAOs, decentralized autonomous organizations.
Okay, but let's get back to that core listener concern. Directly. What about human jobs? If machines and AI can do more and more tasks, potentially better or faster, what unique value do humans bring? Where do we fit?
The source emphasizes those inherently human traits: creativity, ingenuity, critical thinking, especially in complex, unstructured situations that require nuance and judgment.
Things machines find hard.
Exactly. The example of the Go champion is used. Remember, AI surpassed the best human Go players.
AlphaGo.
But interestingly, playing against the machine actually improved the human champion's game when he played against other humans.
Ah, so it pushed human skill higher.
It illustrates how technology can augment human skill, push us to higher levels. Although we have to be realistic, the economic incentive in the workplace will likely remain tied to productivity gains.
So while a humanoid robot with access to basically all human knowledge might be technically more productive for many defined tasks than a human,
The challenge and the opportunity for humans is adaptation. It's about leaning into and developing those uniquely human capabilities: creativity, imagination, empathy, complex problem solving that needs nuanced understanding, things that are really difficult to automate fully.
and disruption is expected across many sectors.
Oh, yeah. Transportation, obviously, with autonomous driving, retail, healthcare, finance, many areas. The source suggests those most at risk are likely individuals and organizations who are unwilling or maybe unable to adapt to these new ways of working, new tools, new interactions with technology.
So the path forward, according to the source material, isn't about fighting the technology.
No, not at all. It's presented as being about adaptation, about continuous learning, taking initiative, dreaming big, using your imagination to figure out where you fit, how you can add value in this rapidly changing landscape.
And the research itself, the experts' research, is positioned as a tool to help understand these forces.
Exactly. A resource to help people grasp the scale and direction of change. The source also briefly touches on some external factors, just neutrally reporting the expert's view on them.
Like what?
Like, for instance, the view that certain trade policy shifts, like the stated goals behind recent tariffs, while maybe chaotic in the short term, might be attempts, however clumsy, to address underlying global trade imbalances. Or just noting that broader macro factors like an economic slowdown in Q1 of a given year had a significant impact on companies, including disruptors like Tesla.
So seeing the whole complex environment these companies operate in?
Right. It's about gaining perspective on the entire landscape to make more informed decisions, whether personal or professional.
Okay, so how do you, the listener, take all this information, the 5 platforms, the huge market predictions, the job implications, and actually apply it to your own life, your own future?
Well, let's consider a practical scenario. Save $1,000, and you're thinking you want some exposure to this kind of innovative future. What do you do?
Yeah, how do you even start?
The suggestion from the source material isn't about picking one single stock, which is very risky. It's more about gaining broad exposure to these innovation platforms by averaging in over time.
Averaging in, like dollar cost averaging.
Exactly. Maybe investing a little bit each month or each week consistently, and doing that using something like an ETF that's focused specifically on these disruptive technologies.
An ETF exchange traded fund.
Yeah.
Like buying a basket of relevant stocks all at once.
Correct. And the ARK ETF is mentioned as one example, obviously not the only one, but one example that specifically focuses on companies across all 5 of those innovation platforms we discussed.
So with one investment, you get exposure to a portfolio of dozens of companies that this research identifies as being at the forefront.
Right. Diversification within the disruptive space. And the philosophy underpinning this is resolutely long-term.
How long-term?
It's about investing with a horizon of 5 to 10 years, or maybe even longer. And As the expert puts it in the source, kind of closing your eyes to the inevitable short-term volatility.
Because you believe in the long-term trajectory.
If you believe in the long-term trajectory of these technologies, yes. Based on their research, their analysis, the technologies they focus on have the potential for really dramatic growth. Potentially increasing in value, they estimate, more than tenfold over the next 5 to 10 years.
Okay, tenfold potential sounds incredible. But we absolutely have to immediately follow that with a disclaimer, right? Which the source material itself strongly emphasizes.
Absolutely critical. This is based purely on their research, their analysis, their specific modeling, and their predictions. These are not guarantees, not promises of future returns.
You absolutely must do your own research, understand the significant risks involved.
And crucially, you can lose all of your money investing in highly volatile areas like disruptive innovation. It's high risk, high potential reward.
Yeah.
And the experts firm, ARK, they actually make their research freely available online, precisely so people can dig in, understand the underlying analysis, the reasoning behind their calls, and then do their own due diligence.
So to be crystal clear, this discussion is based on the analysis presented in the source material you provided us. It should not be taken as investment advice. Please do your own homework.
Absolutely. Very important.
On a maybe more personal note, the expert's own career journey is shared in the source as perhaps a source of inspiration.
Yeah, succeeding in what was, and frankly still largely is, a male-dominated finance industry.
How did she navigate that, according to the source?
By focusing early on, apparently, just making her bosses look good, leveraging her specific knowledge she started with economics, taking opportunities when they came up.
And mentors played a role.
A profound role, it seems. Art Laffer, the economist, is mentioned specifically as a key mentor. The source touches on that personal connection, crediting him significantly, and the emotion of sharing her later success with him.
So it's an illustration of how focus, learning, building those relationships can help, even in tough environments.
It seems so. And to maybe highlight that disruptive thinking process, how she identifies these trends, the expert shares some ideas that initially seemed, well, maybe the craziest, but turned out to be right.
Oh, like what?
Examples given include the very early realization that autonomous vehicles are fundamentally robots, not just better cars.
Reframing the core technology.
Exactly. Or seeing the unexpected potential for transformer robots that can physically reconfigure themselves for different tasks.
Okay, that's thinking ahead.
And connecting seemingly disparate things like Elon Musk's work with the Boring Company, digging tunnels here on Earth, to the seemingly unrelated, very long-term goal of colonizing Mars. Seeing the convergence, realizing that tunneling technology would be essential for building habitats underground on Mars.
Wow. Connecting dots others don't see.
These examples really illustrate how she apparently identifies convergence and sees future possibilities driven by these intersecting technologies.
Now, while there's clearly enormous optimism about the potential here, does the expert express any concerns?
Yes. There's definitely concern expressed about individuals being unprepared for the sheer speed and scale of this change, particularly those who might be resistant to adapting, and also broader concerns about how society as a whole will manage the disruption, the transitions.
That's a valid concern. And what about key figures, like Elon Musk himself, his health, his future?
That's briefly considered, too. The source material looks at the potential impact of his own well-being or, eventual departure on the pace of progress at companies like Tesla or SpaceX.
And the conclusion.
While acknowledging his, almost irreplaceable genius and profound impact, the view presented is that he has already built such a significant runway of technological progress and assembled teams capable of continuing to execute on these very long-term visions, like Mars colonization, potentially happening by the 2040s or 2050s, even without his direct day-to-day involvement later on. The momentum is there.
Okay, so let's try to wrap up the core message from this deep dive into your source material. What's the big takeaway?
The world is undergoing incredibly rapid transformation. That seems undeniable. And it's driven by the convergence, that interaction of these 5 major technological platforms we've discussed. Robotics, energy storage, AI, blockchain, and multi-omic sequencing.
And this transformation, it's creating just massive new opportunities, both in terms of potential investment growth and the emergence of entirely new industries, new job categories. And it's a big if you are willing to understand what's happening and position yourself on the right side of this change.
Exactly. And being on the right side, it isn't just about knowing the tech buzzwords. It's presented as being about a mindset.
The mindset of a
continuous learning, embracing initiative, daring to dream, maybe, and using your uniquely human imagination and creativity to adapt and find ways to thrive in this constantly evolving landscape.
So this deep dive, it's really been about exploring the powerful insights and the detailed analysis presented in the source material you shared with us.
Yeah, hopefully equipping you with some knowledge, some frameworks to better navigate what's coming down the pike.
Okay, building on that idea, then adapting with uniquely human skills in a world increasingly powered by AI and robotics here is a final provocative thought for you, the listener, to consider on your own. Beyond creativity and imagination, which we've talked about, what other inherently human qualities or abilities do you personally believe will become the most valuable, maybe even irreplaceable, in the workplace and just in society over the next few decades?
That's a good one. Something to definitely think about as you process all these potential futures.
Thank you for joining us for this deep dive.